Good afternoon, everyone. This is Brad Matheny. Today is the 18th of July, and just wanted to talk with you guys about this setup this week. Very interesting. This is my SPY cycle patterns. If you've been following me, you know already that we've called beautifully almost every single day for the past 4 weeks now. Just pretty much perfectly, and remember, these patterns go all the way out into the future. So we're looking at now what's going to be closing out this week with our bearish exhaustion. And then we move into this pattern over here. And then we move eventually into the end of July and move here into this July. And really, you've got to take a look. I'm going to talk about this here in a minute. But take a look at this, folks. And then remember, I'm going to show you back over here a chart right here. Get rid of the bottom. And now remember, I have been trying to essentially share my research. The whole purpose of me starting this was to show you how powerful these triggers are, how powerful this is. This gives you 2 to 3 weeks advance notice of what's going to happen. I'm going to talk about this here as we go forward, but I started back over here on this bar where the green line is, and I marked what I thought was going to happen with this blue and this orange and red and these bars, what I thought was going to happen 2 weeks in advance up to this bar here. And it played out beautifully. I mean, yeah, I was off a little bit on these highs, but it played out, followed my analysis, down bar here, sideways bar here, carrying through with the down trigger, down bar here, up bar here, up bar here. Still didn't get up into this 548 level that I thought. Down bar here, sideways bar here. And I told everyone we're going to move into a rally phase. And sure enough, we brought into this nice solid rally phase. Then we had a carryover into the rally. This was supposed to be a big rally day, didn't really show up. It carried over into this bar. We saw some volatility, more upward movement, more upward trending. And again, I'll shrink this down so you can see this is what I thought it was going to be. It was off a little bit. Then we ended up with the exhaustion breakdown pattern yesterday and the big major crush pattern today. Today in the morning, I highlighted two very important components to followers. I highlighted the idea that price could move. I'll try to drag this down so you can see it. Price could move either up, here's the morning, either up into a straight line, but I kept telling everyone, it needed to clear this 559, 560 area on a solid close to be able to see this continue to move higher. Or we were going to move down into this area and we would need to see this support level hold, this 554 to 555 level. Well, we rolled over, moved down very aggressively into, this is a 30-minute chart. Let's go to a 15 or a 10. We moved into that resistance support area, right over here, blew through it, rolled back up here. I kept telling everyone that this looks good, but in reality, I needed to see it move up above this 555, call it 75 to 556, call it 20 area, and then I would consider a move back up into this area. That never happened. We never saw the correction back to the upside. We rolled back into extended downward trending through the end of the day. Now, what do we get tomorrow? We get this big bearish exhaustion pattern. Now, a bearish exhaustion pattern, much like this exhaustion carryover and possible breakdown, means that we have a potential here, and I'm just going to highlight this for you, but we have a potential for a good solid rally tomorrow. Sounds crazy, doesn't it? But we have a potential for a bearish exhaustion rally. And now what we're going to do here is we're going to use Fibonacci to try to give us an idea of what we're looking at tomorrow. Now I'm going from rejection level to rejection level. If you follow me long enough, you're going to see what I mean about what rejection is. And what I'm looking for right now is a 382 to 50 level, which looks like it is right in this area to this area. Okay, that becomes our intermediate bearish resistance. So this is going to be essentially resistance to the downside. And we want to see if we're getting any kind of a move tomorrow, which is an exhaustion of the bearish trend. We are going to, and now notice that this plays right into my previous support level as well. So what is happening? Support becomes resistance, resistance becomes support. Fibonacci tells us all of this. And Fibonacci is the measurement of price in relationship to natural cycles. It really does reflect down into energy, and I want you to be aware of that. So where we're at is we are now looking at a potential opening price level, maybe in this area, I'm guessing tomorrow, and the bearish exhaustion could see us move rather consistently back up, targeting 559, 560, maybe a little bit higher. Okay, and that's what bearish exhaustion is about. Then, ladies and gentlemen, based on these cycle patterns, we are going to move into a period of consolidation. And you can see here, here's our bearish exhaustion. Then what do we get? We end up getting a topping pattern on Monday. A top is typically a move where price attempts to get rid of this. A topping pattern is typically where price attempts to move up, find a peak, and then roll down. That becomes our topping pattern here. So I would expect on Monday to see price up in the 561, 562 or higher area. This day, tomorrow, Friday, may close in the 558, 559, 560 area, maybe even a little higher up in this area. Okay. And then as we come back over here into next week, we get a flat down, a harami inside, which is an inside bar, a temporary bottom, which means we're trying to set up a base or a bottom on the 25th. And let me come over here and show you what that looks like. A temporary bottom is very similar to that topping pattern. A temporary bottom pattern typically looks like price attempting to move down, set up a base, and then move higher off of that base. Temporary bottom setting up right in this area. So we really are going to consolidate here, move into our temporary bottom, and then potentially rally right on out of this. Okay. And look at how the rally sets up. So we move into our temporary bottom, then we move into top resistance, which means that on the 26th, right over here, here's our rally up, and then we get a top resistance. We'll probably come up and find some sort of a top somewhere over here, kind of like that. And then look what sets up next. Weekend, we get a consolidation, then a crush, then we get a flat down, a pop in carryover mode, a bottom rally start, and then a base rally in trending mode. Notice this is in a counter trend mode, and notice this is in a counter trend mode. So now I missed that earlier. Let me come over here. So this bottom here, oops, got rid of something I probably needed, is actually more like this, folks. It is a top pattern that is in counter trend mode, and I would then expect that to be another higher low. And then we move into this flat down, a pop trigger, which is a very big bar, kind of like a crush, and then a bottom rally in counter trend, and then a base rally. And that's going to move us into this, in my opinion, into this rally phase near this apexing pattern right here. See this area here? I believe we're going to come into that area or this area. And what we're going to see is a massive move. Shrink this down and drag so I can show you. I've already drawn these levels, but this is pretty much it. At this point, what we're looking for is a rally phase up out of this. And I will just set this to green so you can see it. Oops, darker. So we're going to be in between this area here. Let me get rid of this. Oh, okay, I'll draw it again. And I know my charts are full of stuff, but follow me for a while. Honestly, read some of the comments on my YouTube and others on my videos. But honestly, just follow me and see how this plays out over the next couple days. Like I told you, that today was a crush pattern, a major crush pattern in counter trending mode. And look at what it was. Look at this bar. This is a huge crush pattern on very strong volume. Tomorrow we get an exhaustion, bearish exhaustion pattern, which will likely be a move back up into this 5,665 on the ES chart. But I mean, these patterns are known to me weeks in advance. So that's why they become so powerful. We can trade when things line up, 2, 3, 4 days in advance of some of these triggers. I've got clients right now that are positioning down off of these lows, looking for call options in the SPY and the QQQ, some of them even in the IWM and others. They're looking for this move out here towards the end of July, 2 weeks out, knowing that my predictions are saying that we're going to be moving into an uptrend after the 24th or the 25th. So we really have a key insight into the market that nobody else has. And it all comes down to my work on these SPY cycle patterns and then applying them with smart trading technology into determining what to do next. Whether it's a 1 minute, 2 minute, 5 minute, 20 minute, daily, weekly, we have a clue as to what's going to happen. And like I said, these patterns are about 80 to 90% accurate. Yeah, they sometimes don't work. But like I said, for the past 4 weeks, I think I've missed on 2 days. So that means we've had 20 days of predictions and I've missed on 2, about 10% or about 90% accuracy. So I'm a little hoarse today, been running around, taking care of everything. I wanted to touch base about this crush pattern. And let me come over here and show you the NASDAQ. This major crush pattern was really a solid move to the downside. So here you can see the QQQs, a big solid crush day. Same thing here with the SPY, a big solid crush day. Okay, now we consolidate, build a base, and then start to rally around the 24th. Okay, guys, let's see what happens. Talk to you later.